Video 2, November 13th, 2022. This is actually going to be the most important video because Thursday morning was absolutely ridiculous. Video 3, I'm going to go into my trading plans. This past week was amazing for me because I have a lot of puts and I'm loading up on puts until Thursday morning. The Nasdaq was up 9.5% in 2 days on CPI of 7.7. 7.7 is better than 7.9, but 7.7. Can you believe the Nasdaq rallied close to 10% in 2 days on super rapid, hyper hot inflation of 7.7? The last time we had a rally like this in 2 days was April of 2020, when the Fed put rates at 0.25, said they would stay there at 0.25, was putting out money, $5-6 trillion. So was that a reason for the market to go up 10% in 2 days? Or inflation of 7.7 because it's better than 7.9? Hilarious, but we can't make this up because it's happening. And what is so funny is that people, even Tom Lee on CNBC, was saying the Fed is gonna pivot. I'm sending you this video. I'm sending Scott Wapner this video. You people are hilarious, and you people are getting paid. The problem is you people are getting mega paid. And I'm Nathan from Queens. This is Ultimate Traders. I'm not getting mega paid. But here, listen to this, and this is why I posted on Friday. All right, this is what is normal. What is normal? 2% inflation, 3% GDP, and close to 5% unemployment, and 3 to 5% interest rates. That is normal. What do we have right now? We have 7.7% inflation. We have GDP that was 2.6% positive. By the way, 2.8% come from exports, but this gives the Fed ammo, believing that we're out of a recession because we had 2 negative quarters and now we are at 2.6. We have unemployment at 3.7 and interest rate is at 3.83. What does that mean? That means that interest rates at 3.83 are in the normal. Okay? GDP at 2.6 is opposed to 3, so it's a little bit off. It's slightly normal, right? Inflation is a 7.7. 7.7. So normal is interest rates near 5. We got inflation at 7.7. Obviously gonna keep raising rates. Come on, man. What you guys are absolutely hilarious. But hey, you know what? FOMO, speculation, moves the markets, okay? We all know that. And after Thursday, Friday, we know that. What that gives me, though, it gives me the ammo and confidence that when bad data is done, that we're going to skyrocket and I'm going to make a ton of money like 2020 when I was up 300%. 2021, I was up to 120%. This year, I'm up only like 30% because I'm freaking scared. I'm like 75% cash. I'm trading with like 5 or 10%, not even 10%. I'm trading with like 5% or less of my capital, just buying puts, carefully buying puts and waiting for the right time. Because no matter what anyone tells you, most of the money is made in a bull market because over time, the S&P is 8%. The Nasdaq 100 since inception is about 14%. That tells you that over time, everything goes up. So we got to be bullish long term, but short term, the data is bad. But when we hit a bottom, and we haven't hit a bottom, but when we hit a bottom, now we can see there's going to be furious rallies because we're having furious rally on horrible news. Yes, I agree. 7.7 is better than 7.9, but I'm still not even taking 0.75 rate increase off the table, which is going to put us above 4.5. Now, if we're going to have another CPI reading, I believe December 12th, and December 14th, we get a Fed decision. That CPI is more important. So if that CPI, because we just had 7.7, comes in at 7.4, 7.3, we might get a 0.5. If that CPI comes to 7.5, we might get a 0.75. And I hate to tell you all, because this guy, Tom Lee on CNBC said, December is going to be the last Fed. Yo, Tom Lee, I know you have the funds. I will bet you $100,000. Let's get it signed, documented, that Fed hike in December 14th will not be the last Fed hike. And it's going to be at least 0.5 or 0.75. I would love to bet you 100 G's. Let's go. I'm sending this out to you because you coming on air and saying these things, I'm sorry, it's ridiculous. It's ridiculous because we're going to get 0.5. Now this I don't know. So I don't know if we're going to get 5%, interest rates or 4 point. What I do know, we're going to get 4.5 to 5%. So I'm thinking that we might get 0.5 in December, and we might get two more of 0.25. So that gives us at least another 1% higher. And right now we're at 3.83. So I could see us at 4.83. Now the way the market moved was like CPI was 5%. I wrote that in the post. Okay, if CPI came in at 5%, then we rally. Then the Fed is done. And the Fed is going to wait if we get a 5. Because in the beginning of the year, when the hike started, the Fed wanted a 5 handle by the end of 2022. A 5 handle is 5.9. Are we going to see a 5.9? Are we going to see a 5.9? No, we're not going to see a 5.9. So they wanted to see a 5 handle by the end of 2022 and get down to low 4s, even high 3s by 2023 end. Are we there yet? Are we even close? We're not even close. What are you people doing? It is what it is. That's why I'm buying more puts. That's video 3. But you guys are a joke. This is so funny to me. You guys are cheering. It's like you take a test, right? Because inflation is supposed to be 2%. So let's say 2% is taking the test and getting a 65. Even if CPI is a 5, and we're at 7.7, even if CPI is a 5, it's a lot higher than 2, right? Right? So even if it's 5, that's like a 50 on the test. All right? So 7.9 was like a 20 in the test. 7.7 is like a 25. So on a 25 out of 100, everyone is cheering, and the Nasdaq is up 10%. You can't make this up. This wouldn't have happened years ago. Because right now, retail comes in first because they're the ones that come in and bids. And then market makers, big money comes in too. Everyone jumps in. There's some momentum. So I understand that. It's momentum. But the first people to jump in is retail. So retail, because retail will take the risk. And when big money sees it, they join in. Everyone is wrong. Everyone is wrong. You're going to see. Why? Because the only way to combat rate hikes, and I've said this since the beginning of the year, even my first videos in January, the only way to combat rate hikes is earnings. What is earnings? Earnings is bad. Google, Meta, Facebook, Amazon, Google, Apple got a 65. Netflix, Tesla, all bad. Snap, bad. They're all earnings that all the big giants are bad. So the only way, like I said, to combat high interest rates is good earnings. So we're getting bad earnings, which means that the E in PE is going down. Rate hikes aren't stopping. They're only going higher. And because earnings were bad, and not only bad, the forecasts for the fourth quarter were bad too. That's a fact. Did you see the earnings calls, or was it just me? I'm not making this up. What that means is Fourth quarter earnings reported the third week of January is likely to be bad too. And because of that, I don't know if we're going to have good data until April. April will be the first quarter's earnings reported the third week of April. Maybe by that time, numbers will start going up. Rate hikes will probably be done by that time. And by the way, the Fed has said this since June. They're going to front load. They're going to front load. So anyone that thinks they're going to back off, stop hiking, or reverse rates, come on, you people are so funny. So that's video 2, state of the market. I'm buying puts. It's okay. I'm getting time on my puts because people aren't too bright. And I learned also, the mistake I made in March, for the April 14th puts, I got cocky and I was buying puts with 3 weeks, 4 weeks out. Now I'm buying my puts 2 to 3 months out. All right. So video 2, state of the market. The market is bad. We got a 7.7 instead of a 7.9 and the Nasdaq rallies 10%. You guys.